Okay, in this session, we are going to show the accounting treatment for replacement of component or replacement of part, which is under the subsequent costs, subsequent expenditure subtopic of MFRS 116. So replacement of parts, if it's a major parts and that replacement of parts or replacement of component is meeting the recognition criteria, it can be added to the carrying amount of the asset or can be added to the asset if it meets the recognition criteria. As I mentioned, recognition criteria can be either when it improves the useful life, it improves the quality of the product or the service, it also enhance the production capacity. If you talk about a factory, maybe before this you produce only 1,000 units per day, but after you put a device to the machine, that machine with the new device that replaced the old one now managed to produce more than 1,000, maybe 1,500. So that can be considered as meeting the recognition criteria as well. So you have to check your knowledge before this. And let's say you have this inspection and you notice that the parts must be replaced, maybe due to some demand of the your maybe your customer whatsoever. So because of that, let us see how is the accounting treatment. So you have this information here. Let us look at this situation by giving you a scenario. So you have this machine. This machine costs 700,000. So this is the machine without any adjustment being made. So the machine 700,000 was purchased on or acquired on 1st of January 20X2. So 20X2 is the date of purchase. Date of purchase. We can label that, put that date of purchase, right? Or maybe that is also known as date of acquisition. Date of acquisition. I just reduce the size a little bit. Right. Okay, I put here date of purchase. DOP, date of purchase, or date of initial recognition. So on the date of purchase, you can see that the expected useful life is 10 years. So when you purchase, you expect to use the machine for the next 10 years. And the cost of the machine is 700,000. Cost of 700,000 is your initial cost on that date of purchase or date of acquisition, 1st of January X2. Okay, so how much is the cost? 700,000. Let's say this is the machine, the one that I drew here. Yeah, this rectangle box here, this is the machine, this is the cost of the machine, this is the expected useful life, this is the date of acquisition. So 700,000 is the cost. So now what you want to do is you are going to replace one component of this machine, not everything, just one component, one part of the machine. You will take out the machine, remove the machine's component, not the whole machine, just a component, just a part. And when you take it out, you need to do some accounting treatment to remove that, which is to de-recognize the cost of that component that you want to take out. And you are not going to leave it like that. You are going to take out the old one and replace with a new one. The one that is more cost efficient, the one that is more technological advanced maybe. So you will go and replace that. So this is the story of this particular example. So on 1st of January 20X6, you purchase on 1st of January 20X2. So this is 1st of January 20X6. There has been how many years? It has been 4 years. Is it right? 1st of January 20X2 until 1st of January 20X6. Is it 4 years, class?
Yes, madam.
Yes,
Yes.
madam.
Very good. So 1st of January 20X2, the component will be replaced. So what you will do is, you can see that the one that I use highlights, the yellow highlight is everything about the old machine and old component. So on 1st of January 20X6, this is where you are going to replace the component. I put there DOR, date of replacement. A major component costing 100,000. That 100,000 refers to the cost of the old component and when it was replaced back in 20X2. So you replace the component of a machine that was acquired on 1st of January 20X2, not the whole machine, the old, just one component that cost 100,000. it was replaced with a new component. It was replaced when? On 1st of January 26, the new component was 200,000. That 200,000 is the initial cost of the new component. So therefore, the issue is how do you treat that replacement of component of the old with the new one. The carrying amount of the machine after replacing the component, you are asked to calculate that. What is the carrying amount of the machine after replacing the component? Meaning that after you took out the old one and you replace with the new one. So I want you to assume the depreciation here is straight line method because you are given the 10 years to be the useful life. You are also to assume it is yearly basis because no information stated otherwise. So I have included the information. So I want you to calculate not only the carrying amount, or carrying amount is what? Cost minus accumulated depreciation. So I want you to calculate the carrying amount on 1st of January 20x6 after it was being replaced, the component was being replaced, the old was replaced with a new one. And then I want you to calculate also the carrying amount by the end of the current year, 31st of December 20x6. So meaning that first beginning and then at the end. You need to record that as well in the journal entry in the books of this owner of the machine. So no name is given. So what you need to understand is this picture here. First, the old component, the cost is 100,000, this one. The accumulated of the old component you must calculate. I will show you because you need to go and de-recognize the old component, the cost together with the accumulated depreciation. After you have done that, you will insert the new component into the machine. So the new component, 200,000 will be in the machine. And after you have inserted the component, you need to now calculate what is the carrying amount. So the carrying amount after the replace immediately after the replacement, and later carrying amount after 1 year it is being replaced. So let's look at that. So step number one. Step number one, of course, is to calculate the carrying amount of the machine itself before the replacement. So before replacement, what is the carrying amount? So to calculate the carrying amount or the carrying value, you will take the cost of the machine and deduct with the accumulated depreciation. So step one is to find the carrying amount. So the cost of the machine is the cost that were on the date you acquired, which is on 1st of January 20x2, the date of purchase. And how much? It was 700,000. Then you need to go and find out the accumulated depreciation from that date of purchase, which is 1st of January 20x2, up until 31st of December 20x5, which is before the date of replacement on 1st of January 20x6. So to calculate that, recall what you learned in FAR210. Under straight line method, the depreciation is calculated by taking cost minus residual value divided by the useful life. So since you are given the useful life, so there is no residual value. If let's say there is a residual value of 100,000, so you need to take 700 minus 100,000. But here there is no residual value. You just take cost minus 0, residual value is 0, divided by 10. You need to find out the accumulated depreciation for the last 4 years. Last 4 years, starting from the date you purchase, the date of purchase, here, date of purchase, until the date of replacement, and that is exactly 4 years. Just look at this one that I am going to highlight. Another highlights here. Okay. Okay, that was 4 years. Is it 4 years, class?
Yes.
Yes. Okay, 4 years. You need to go and remove that accumulated depreciation as well. So we calculate that, and you will get the figure that I show there, which is 280,000. So every year you charge 70,000. depreciation. So for 4 years, you have already charged 280,000. So you have the first carrying amount, which is 420,000, that happens immediately after the before the replacement. So this one is before replacement. Now you want to replace. Before you replace, you have to take out the old component. So this is the old component, which is 100,000. That old component of 100,000, as I illustrate here, yeah, you see here, must also be removed together with the accumulated depreciation. So your next duty is to take into consideration what are the accumulated depreciation as at the date of replacement. So you need to go and find out the 4 years depreciation relating to that component that is going to be replaced, which is the old component. So take 100,000 again. If there is any residual value, deduct with the residual value, divided by the number of useful life, multiplied by the number of years from the date of acquisition until the date of replacement. So therefore, your depreciation would be accumulated to be 40,000. 100,000 minus 40,000, so it is 60,000. So this 60,000 is the carrying amount that you have to go and eliminate. Yeah, so therefore, when you have this carrying amount here, 420,000, this is before replacement, you will remove. So when you remove, you go and deduct or minus this 60,000. Then you include a new one. So number three, step three is to include the new component. So the new component that you just purchased costs you 200,000. That initial cost is added here. When you have done that three addition, the addition and subtraction, you will get 560,000. That 560,000 is the carrying amount of the machine immediately after replacement. It is 1st January. So will the depreciation be the same as at 1st of January by the end of the year? Is it going to still be 70,000 class, or is it going to be different? The depreciation of the machine after replacement, will it still be 70,000 per year, or will it change now? Anyone?
It will change.
Yes, it will change. Why? Because you have taken out the old one and replaced with the new one. So how do you calculate the depreciation? So there will be a new depreciation to be recalculated, and the new depreciation will be for the first year, which is for the first year after replacement, 31st December X6. So it is no longer will be based on the cost, but it will be based on the carrying amount. So you will take the carrying amount, which is the carrying amount after the replacement, 560,000, and you will divide them with the remaining useful life. So take the carrying amount divided by remaining useful life. However, if you have residual value, it will be carrying amount, which is 560, minus any residual value. Let's say residual value is 3,000, for example, you will remove that and divide by remaining useful life. Remaining useful life is take the estimated useful life minus the number of years that you have used up the machine. Number of years that you have used up is 4 years. So 10 minus 4 is 6 years. So 6 years is the remaining useful life. I have already made amendment to this. This should be deducted. So please go and adjust to your slide, because I've already informed that this must be adjusted. So go and adjust that. Don't go and add the depreciation. Go and deduct the depreciation against the previous carrying amount. After you have done that, you get the carrying amount of the machine by the end of the year. That will be the one appearing in your statement of financial position is 466,667. 466,667 is the carrying amount in the SOFP. 93,333 is your depreciation in the SOPL. Yeah. Your accumulated depreciation to be eliminated would be 280,000. Yeah. And also, you have to take note that this is not the case of the asset being replaced, but it is the case of the component being replaced. So depreciation that need to be eliminated is this 40,000. We are also going to eliminate this 100,000 because the cost of the machine is of the component is being replaced, the old component. So let us look at how do we record this in our books of accounts. So number one, always look at when is the year end. The year end is 31st December year 6. So all the record that you need to show is for that year end, which will start from the beginning of the year. So beginning of the year is where you have your replacement of component. Component can be replaced throughout the year, maybe beginning, maybe in the middle, maybe at the end of the year, maybe in the quarter year, any time during the year. So this example is illustrating the one at the beginning of the year. So number one, record the new machine, that new component that was being purchased. So take the one simpler first. So this is an easy one. So debit machine. Machine is your PPE. So debit machine, your PPE. Don't write debit PPE. Debit the machine. Don't debit PPE. PPE is the umbrella. Machine is what under the umbrella of the PPE. So debit the machine. What you debit is the new component that you acquired. So that was 200,000. I'm referring to this one. This one, this component here. This 200,000 is what you debit, and you credit bank, or maybe you credit cash, or sometimes you can credit other payable depending on the terms of payment. So debit machine 200,000, credit cash 200,000. Now comes the duty for you to eliminate or de-recognize. So journal entry number one is to recognize the new component. Journal entry number two is to de-recognize the old component together with the accumulated depreciation of that old component, not the machine. Accumulated depreciation of the component of the old component of the machine itself, which is the, I put there old component or component. I have written there, you can check. You can also screenshot whatever that you think you need to add up to your notes, to your whatever knowledge, you can add up that, and you can use the same highlight if you like, because I use yellow for the old, I use green for the new, and for those important things I use red. All right, okay, because of the difference between the cost of the old component, this cost of the old component, the one here, and the accumulated depreciation of the old component, there was a difference of 60,000. So that difference of 60,000 is your loss on disposal. So loss on disposal will be expense off to the profit or loss under admin expenses. Now, that was at the date of replacement. By the end of the year, you have used up the machine that now has the new component inside it. So by the end of the year, after 1 year, the machine is used up together with the new component, and therefore there will be still depreciation being charged, but you have already taken into consideration just now that the depreciation will be different, and the depreciation was recalculated, and that was 93,333. So that depreciation will be debited and credited to the accumulated depreciation. So that is the entry here. So information, the extract of SOPL should have shown the loss on disposal and the depreciation. If you prepare extract of SOPL, the loss on disposal and depreciation should be in your extract of SOPL. So I just put here extract of SOPL. Let's say extract of SOPL for the year ended 31st of December X6. So you have your admin expenses, and that admin expenses, you will have depreciation for the machine. That depreciation for the machine is 93,333, and you also will have the loss on disposal in case you are to prepare the statement of profit or loss, loss on disposal, which is 60,000. The carrying amount of what was it just now? Let me check. 466,667 will appear in your statement of financial position, and the movement of this must also be shown in the notes to the account. That will be covered later. Okay, done with that. Replacement of component. So take note, you need to first de-recognize the old component together with the accumulated depreciation, and also taking into consideration the loss or gain on disposal. The next one is to go and insert the new component and record it as well. The next last step is to record the depreciation. Class, do you have any question before I proceed? Yes?
No, madam.
No, madam.
How is it so far? Is it clear?
Yes, clear,
Yes.
madam.
Very clear, yeah? Okay, good. Now, we are going to look at questions. We're going to look at some work example, which is from the past exam question, not necessarily the new one, but I'm using the one in the work example. So work example here are mostly from past common test question. So let us just go to that work example. I think you have that with you. Maybe you have printed it out, or maybe you have another device where you are looking, or maybe this is your laptop and you have another a tablet where you are looking at the whatever work example. So I'm done with that. Let me just go to the next section, which is to do this. Okay, I want you to go and look at this first example. This one I'm not going to do all. I just want you to take note that question 3 is my concern now. So there are many questions here that comes together with complete answer. Okay, this can help you to understand better. So for example, this one is what you have learned before in FAR210. These are all FAR210 level. So you can go through this yourself because these are from FAR210. And this can also be tested here. If you notice in FAR270, this is tested in part A of the question. Have you tried the question that I have asked you to try for the part A? And I've also supplied the answer key. Have you tried that, class? The first part of it, which is to decide whether to capitalize or expense, and also to calculate the initial cost. Have you tried that, class?
Yes, madam.
Good. So I'm going to check that during our class in our week 2 when we come back from our Raya break, right? So you can go and do this. These are all things that you have covered before. This one as well, what you have covered, but only that I took out, I put the question that comes from previous uh, common tests of the different codes. This one as well, you have learned before. So this, I'm not going through what you have covered. I'm going to do this, question 3. But I'm going to focus only on what you have not covered. So this question combines deferred payment with provision for future dismantling costs, decommissioning, and restoration costs. Take note, yesterday in our first class, I mentioned that deferred payment, if you have incurred some costs where you do not pay for the acquisition of the PPE, but you defer the payment, the present value of the deferred payment must still be included in the calculation of initial costs. The present value of the deferred payment. Remember the case of the installment payment that we made in our uh, example before this. In case you have forgotten, let me just recall your memory. This one here. Little bit upward. This one, yes. Yeah, this one. We're going to combine this, and I'm also going to add up with this thing that I've explained much earlier, which is on initial estimate of cost of dismantling and removing the asset, where I mentioned to you that sometimes you have bought an asset and you have installed the asset, but you have that obligation to remove some items, or the PPE that you have installed. Let's say a machine was installed in the factory, yeah, but later the machine can only last for the next 10 years. After 10 years it will be obsolete, so therefore when you install, there is an installation cost. But in the future, in 10 years time, you need to go and remove the machine. So under MFRS 116, the future cost, you need to calculate how much is the cost if I need to remove the machine, or how much is the cost if I need to to demolish the building. If you talk about demolition of building, you build, the building is constructed, and then after 30 years you go and demolish the building. The cost of demolishing the building, which is the future cost, must be also estimated. However, for the purpose of the initial cost calculation, the present value of that future cost to be incurred in the next 20 years, the next 5 years, must be included in the calculation of initial cost. So that was what we have done before this. So moving on to the question. You still recall that, class? The one that I explained before?
Yes, madam.
All right, never mind. If you've forgotten it, later I will share with you some of the link that maybe will not involve your class, but may involve other class, but you can still watch it, right? I'm going to, to go and share the best among the three that I have recorded. Okay, so just bear with me. Okay. Question 3, calculation. Here is trying to illustrate how do we calculate initial cost with deferred payment, how do we calculate initial cost with future dismantling costs. So this is the company that bought a new machinery. Just to tell you that new machinery costs them some amount to be paid. So this is the machinery that you purchase, right? And it will be used in the production process. So this is producing what? Oat cookies. So this machine is a PPE because it is held for use in production, and is expected to be used for how many years? We have to check the estimated useful life. How many years? No information is given. Never mind if there are information. That is the case. So that is a PPE. So here I want you to look at the amount that the information in second paragraph. Purchase price of the machine is 6.5 million. The purchase price consists of two payments. So you do not pay them immediately. The cost of 6.5 million. Well, what you do is the purchase price have two payments. The first payment out of 6.5, 3.5 million will be made immediately. So made immediately means credit bank, you are going to debit the machine. So immediately 3.5 million. Okay. So therefore, this will be included in the initial cost. However, the remaining payment, which is the second payment of 3 million, will only be made on 1st of July. So there is no installment like first or second installment. There are only two payments. First payment, second payment. Yeah. Because in the first example that I did with you, there are first payment and then there are two installment. But this one, there is only first and second payment. Second payment is 3 million. But this 3 million is going to be incurred on 1st of July 20x9. You acquire the machine on 1st of April 20x7. So this is the initial recognition date, or in simple word, this is the date of purchase. Okay. Therefore, this one is the future cost or future value. And this one is the present value, which is 2.85 million. So under MFRS 116, the future value will not be recorded, but the present value will be recorded or will be included as part of the initial cost. So that's why if you look at the answer here, the first one will include the first cash payment, and the second one will include 2.85 million. And that 2.85 million is the present value of the second payment. And at the same time, the company also have other costs incurred here. So go and check which one, and go and check whether you can understand or not why it was capitalized, why it was being expensed off. Then you have at the end of the useful life of the machinery, okay, do you remember this is the machine that was maybe installed in that factory? The company estimated that the dismantling cost of the machine, so the machine must be dismantled by the end of the useful life. So to dismantle the machine, you have to incur a cost of 30,000 by the end of that useful life. This is what? That is the future cost of the machine. The present value of the future cost is given here to be 21,000. Therefore, the present value of future payment of 21,100 is the one that you must include where? In the calculation of initial costs. Okay, the calculation of initial costs. Right. So that is 21,100. So all other items here, you can go and check again why it is included, why it is excluded. So, but my focus is on the present value. So class, I'm just focusing on the part that is related to the present value. Now, for both, these are all at present value for both. But this one is present value of the deferred payment, but this one is the present value of the future dismantling cost. So is it clear, class?
Clear,
Clear,
madam.
madam.
Yeah. Okay. I will move on to another example. Remember, our class start at 1:45, so I will stop at 2:45. Do you have class? Sorry, we start at 12:45, right? So we will stop also at 1:45. Do you have class at 2? Do you have class at 2 p.m.?
No, madam.
No,
No, okay.
madam.
I'm afraid you have class at 2. That's why I'm trying to give you some reservation for you to perform your prayers. Never mind. I'll just finish off with the second example on subsequent costs. Okay, subsequent costs here is on replacement of component. This one is from Common Test April 2022. So after I've done this, you can try part B of most of the common tests, right? Because this is from part B. So common test has four section. Part A is calculation of initial cost and decision to capitalize or expense off. Part B is on replacement of component or parts. Right. That has been the trend so far. So you have this Manufacturing Bhd involved in making of Sambal Ngosek, and the product is highly demanded. Sambal Ngosek, maybe something like Sambal Nyek, I'm not sure. And the product is highly demanded at present. The units are all sold out. You put into the you go and put them into advertisement. Maybe after 2 days everything are sold out whenever it is available in the market. Thus the production becomes so intensive that the machine is fully utilized every day. So this is a longer version of the example in your notes. So as at 1st July 2021, you can see I use highlighters there, and there are three colors there. So the one in yellow is relating to the machine. The one in green is relating to the new component that will be added. The one in blue is relating to the old component, existing component that will be replaced. So when you have different highlighters to highlight the information, you are going to have a better view of what is to be recorded. That was just my personal opinion. If you think this helped, why not? You can follow me. As at 1st July 2021, the company has its discount, machinery costing 2.7. So this one are all before replacement. Before replacement. Right. Before replacement. You have that. And the next one is you are informed the accumulated depreciation was 1.3 million, 1.35 million. So remember, these are the all the information that are wait, I just take out some of the PowerPoint because I need to charge this, okay, because my laptop is running out of battery. So you have this 1.35 million. These are all relating to the machine before replacement. in order to meet the current demands, the company has been advised to buy a special component. That special component is replacing the existing component. And that special component increase the output of the production and extend the life of the machine. So here means it meet the recognition criteria of the PPE. Why? Output of the production has been increased and the life of the machine can now be extended, right? So life has been extended. So this is meeting the criteria and therefore you can capitalize uh, the purchase of the special component to be part of the PPE itself. The cost of the old component, remember the blue one here is about the old component, is 300,000. It was bought on 1st of July 2016. So 1st of July 2016 is actually the date of acquisition or date of purchase, initial recognition date. So it was the date that was where you purchased the machine. And remember that machine contains the component of 300,000. That 300,000 is actually part of this 2.7. And now you want to replace that with a new component costing 500,000. The date of replacement will take place on the it is taking place on 1st of July 2021. This is the date of replacement. It is the company policy to charge depreciation on straight line method using monthly basis. And the depreciation rate for the machine is 10%. So 10% on cost. 10% on cost here refers to 10% on cost minus residual value, right? 10% on cost minus residual value. Okay, recall your depreciation that you have learned before. This would be 10% on cost minus RV. RV is residual value. Okay, this one is straight line method. Right. The company adopts cost model. Cost model, meaning that they do not revalue the asset. They just record the asset at cost. They reduce with the accumulated depreciation. And take note, the year end of the company is on 30th June, not 31st December, but 30th June. Okay, you are asked to calculate the carrying amount of the machine as at 1st of July, immediately after replacement, right? I will show also further answer what is uh, the carrying amount after replacement as well, as at 30th of June 2022. So the year end of the company, current financial year end of the company is from 1st of July 21 up until 30th of June 22. So we are going to have this being recorded into our statement of, sorry, our journal entry, and all our transaction will be for that. So you asked to record the journal entry for this period actually, 1st of July 2021, discuss accounting treatment. I want you to focus on A and B. Journal entry will not really be our focus this time. I want you to now be able to discuss the accounting treatment. So number one, you need to first do like what you have done before. We'll just erase because I used this also before this. Okay. Right. So step number one, go and find out what is the carrying amount of the machine before the replacement. Step one. In this question, you are not going to calculate any accumulated depreciation of the machine before replacement since it is clearly given. So before this, we have to calculate. Remember, we calculate just now 280,000, but this one is given here, 1.35. The cost is given. So just take this minus with this. You take that, you get 1350. That is the carrying amount before replacement. The next one is to find out what is the carrying amount of the old component. O component is the one here, the component that you will replace, that 300,000. How much is that carrying amount? So 300,000 is not the carrying amount. You need to go and remove with the accumulated depreciation. Remember, you purchased the machinery 1st of July 2016 and you replace it 1st of July 2021. So your accumulated depreciation, can you first delete this, cancel off the one at the bracket next to the cost figure there? Not next to the cost. Do you have that in your answer? Yes or no?
Yes.
Oh yeah, can you please delete this because this one is calculation for accumulated depreciation. The cost is 300,000. Given, right? So cost of 300,000 is the one given in the information to that cost. Remember, blue is for the component replace. Accumulated depreciation of that component, you take 300,000, the cost of the old component times 10% times 5 years. Why 5 years? Because from 1st of July 2016 until 1st of July 2021, that was exactly 5 years. So that will give you 150,000. So the carrying amount that you are calculating now, the first carrying amount is the carrying amount of the machine before replacement. The second carrying amount is the carrying amount of the component that will be replaced. That component will be replaced with a new one. Oh, all right, sorry. It is 150,000, the component. And that component will be replaced with 500,000, the special component. And that special component, the initial cost of that special component is 500,000. So the yellow is for the machine, the green is for the new component. The green highlights there. So 500. So now next step is carrying amount after the replacement of component. So now becomes 1.7. 1.7 is as at 1st of July, beginning of the current year. Yeah, our beginning of the current year. As I say, it can happen any times during the year. So now, at the end of the year, 30th of June, depreciation here at the is calculated as at 30th of June, which is as at 30th of June 22. 22 for the current year is 170,000. How? 1.7 million, which is the carrying amount of the machine after replacement. Sorry, wrong, right? Okay, it should be yellow. Okay, 1.7 and multiplied with 10%. And times 1 year, so you have 170,000. If it's monthly basis, in case proportion is needed, you have to multiply with the proportion, maybe 6 over 12, do 2. Carrying amount is, after replacement, is 1530. Carrying amount at the end of the year, 30th June 2022. So if you're to discuss the accounting treatment, you need to mention about the number one, derecognition of the old component. How much is the component that are being replaced? So cost is 30 together with the accumulated depreciation are being derecognized. The new component, how much is being capitalized, right? You are asked to discuss the accounting treatment and take note, this is on 1st of July 2021. So on 1st of July 2021, you discuss the derecognition of the old component, discuss the new component accounting treatment, whether it is capitalized and it is recognized as machinery or not, and give the reason why it is being recognized or capitalized. In our case here, because it increases the output of the production and extending the life of the machine. Right. So you can stop there for 1st of July. However, if you are asked to explain for the year ended, let's say you asked to explain for, we just make a little amendment here. for the year ended 30th of June 2022. If let's say the requirement says discuss the accounting treatment for the replacement of component on on 30th of June 2022. If that is the case, you need to include a new sentence here, which I have put here. The new depreciation, mention about the new depreciation that was charged in the SOPL, how much? In SOPL is at 170,000, and how much is the new carrying amount, the new carrying amount after replacement, right? So you have to mention about the depreciation and also what is the carrying amount at the end of 2022. Okay, that's it. The accounting treatment for the replacement of component, right? And these are the journal entry. You can check the journal entries yourself. It's exactly the same like what we have done earlier. Record the component being purchased, eliminate the old component being eliminated, and record the depreciation of machinery with the new calculation. Okay, that's it, class, for today. I'll see you, and I will see you. That would be after the Raya break. And